This show is proudly brought to you by TraderCobb.com. If you want to get bi-weekly video newsletters on the markets that are not shown anywhere else, just subscribe underneath this video on the homepage. If you'd like to get some access to the free webinars to work out exactly what these trading strategies are about, pretty simple. Just go to free webinars. And if you've got friends or family and you'd like to learn more about blockchain and what the opportunity is, well, I've got a full 40-minute course there for you under free courses. Please share this link around and get involved and enjoy the show.
The Trader Cobb Crypto Show, talking business in blockchain.
Ladies and gentlemen, welcome to the Trader Cobb Crypto podcast and show. Today's guest is an absolute powerhouse when it comes to business online. He is the founder of Finder.com, one of the biggest comparison websites in the world. And if you need if you need to find credit card and all sorts of different things to work out the best deal, then Finder.com is the place to be. It is a global organization in many different countries, but I'm not here to speak to this man about that. I'm here to speak to Fred Schebesta of Hivex, which is one of the most trusted and well-performing OTC desks in Australia right now. And I'm not sure if you've got global audience, but we'll talk about that in a minute. Thank you so much for your time. You've been in New York for Consensus, and we're going to cover that as well as some of the details on Hivex. So thank you so much, Fred Schebesta.
Thanks very much, Craig, and welcome to everyone who's listening.
Yeah, mate. Look, I can't believe I haven't had you on sooner. It's my fault. I've been on your show a couple of times. I've thoroughly enjoyed every second I spend with you. We are family friends. Our kids are of the same age almost, and we live in a very close part of town to each other. And I do love having company with you. Now I've got you on the show, and I'm going to ask you some questions. So first question is this, mate. You went to New York for Consensus. Now, I covered Consensus last year, and this year we had a real different scope on how we're going to operate as a business. We didn't go. I want to know what it was like.
Yeah, so, I think it wasn't as packed, so you could move around a bit, which is much, much better. But, the real core of it is there's a lot of new excitement around I guess businesses that have a real use case. And I think a lot of the people who were there were people from businesses which have, gone through this crypto winter to some extent. And what I call, they have a real business.
Yeah.
So we met with a lot of those kind of people. We obviously did some interviews there and met some of the big coins as well, which was really interesting.
You did a lot of interviews.
I think there were a couple of... Yeah, it was pretty wild. I learned a lot from that, actually, and, what are sustainable coins and what are not. Mm-hmm. That was really interesting. And then I met a lot of people, I think, that are more, I'd say they're kind of the OGs, or they're in it for the long haul, as opposed to people who were like, in and out. And in it for just the hype and then gone. A lot of those people kind of left to some extent. There's still a little bit of that around. Like, I think Warren Buffett says, when the tide goes out, you find out who's naked. Mm-hmm. So there was a little bit of that I could sense. But in the bigger scheme, I think more of the reality is starting to come through. And what I noticed specifically with that is there's a few trends.
Go on.
The first one is, we've got this new IEO thing, and I just want to cover that because I think that's a key thing that everyone's talking about a lot about. And I went to the latest IEO announcement by Huobi with Reserve. And I saw them do the presentation and how they went through. It was at the NASDAQ building and all those kind of things. And I was like, okay. But what I firmly don't understand the difference of, or what I wanted to understand in that journey was, what's the difference between an IEO and an ICO?
Boom. Yep.
And I would submit that an IEO is just a repackaged ICO with a listing. And so, is this good for the market? I'm not sure.
Or a little bit of history repeating, as Basement Jacks would say, right? I mean, that's what I'm interested in too, mate. Because I mean, you know, you can package a turd, but it's still a turd, right? You can put lipstick on a pig, and it's still a pig. However you dress something up, it doesn't really matter. What unfortunately is still in the space is a lot of naivety that people don't understand what's actually happening, and they'll chase the latest trend. Now, we did see a lot of talk about STOs back throughout 2018. And for me, that's a really interesting market. And the reason it's an interesting market, and the reason I think a lot of people are disconnected with STOs is that they go, well, there's not that much liquidity, but that's not the point of an STO. It doesn't need to be the point of an STO. But an STO allows security-based investing within a project or within a company. Now, if it's an STO, it's security, so it's got its own legislation. And what that means is, even if you've only got 100 investors, it's not about how many people are using it and how many transactions are going on. It's about giving different people liquidity in projects that are not an IPO, that are not publicly listed. So how else do you get involved in a startup and exit? You build it, you build it, you build it, you sell it. That's one way. You build it, you build it, you build it, you IPO it. That's another way. Now, with an STO, it allows those people throughout any stage of that project to go and put their offer forward and go, well, if someone takes it, they'll take it. So it's providing liquidity in a market that doesn't have liquidity. It's not going to have the same liquidity as trading Bitcoin or any of your other altcoins. It's a very fascinating thing. I don't see the same level of potentially institutional grade investors being interested in IEOs. Would you agree?
So I think there are funds that are probably getting in and getting out with IEOs. They're getting
that's their business model, right?
Yeah. There are certain ones that do that. And I think
investment.
Yeah, they put down 20 bets on the roulette table. 15 of them go to zero, and 3 of them break even. 1 of them does okay, and 1 just literally they make 25x. That's, you know,
they come out on top with a little profit or a decent profit, whatever.
Right. So I have a strong view, and what I noticed with the SEO market in particular, I met a guy who was very, very bullish about the SEO market, and he submitted that there's a couple of things. One was it's not actually a regulation problem. Regulation's fine.
Yeah.
There are ways to get, steps take with the SEC to create a security. That's fine.
The yellow brick road, it's already there. Right.
It's already there. What is challenging is when you talk about liquidity is the measurement of tokens which don't have a model. So, let's say you're tokenizing art, and now you're asking, some quant guy at a high frequency trading shop to make a model for this piece of art, and they're like, well, I don't really know how to do that, right? And so you're going to get, maybe there are some people out there that can do that, and they'll become the high frequency traders of the future, right? There's a huge opportunity here. So let's say you're tokenizing a Ferrari or a Formula One team or a horse or whatever it may be.
Yep.
There will be people out there eventually in the future that need to make models around this, and then they can make a market, right? They can make a buy and a sell. And I think that's one of the challenges. I don't think it's a challenge of, making a market on, a Microsoft or an Apple stock or whatever it may be. I think that's fine. They can model that. That can also potentially have some sort of derivative with an SEO and things like that. But the thing that I think is more interesting as well with the STO space is maybe, and I think this is what we need to just lens out a bit, maybe the place this starts. So I look at any market like this. There's broking, exchange, and clearing. Broking, exchange, and clearing. Broking, exchange, and clearing. Now you're either focused on one of those 3 markets. Obviously, Hivex is focused on broking. You call us up, we'll make you a market.
Yep.
Exchange, obviously we plug into certain exchanges. Clearing, traditionally that was done, by companies like Chess, and I've forgotten the name of the one in the US.
Yeah,
that's fine. But in crypto, it tends to be the brokers or the actual exchange do clearing as well, right? So this is very unusual. Now, I think there are starting to become some custody solutions, and I think this is, again, a new thing I noticed at Consensus is that these areas of how traditional markets work are starting to come out. And my contention, my prediction is the place the STO market will begin will be in clearing, not in broking and not in exchange. Okay. And the reason for that is that currently clearing is broken. It is like in the US, what happens is people at the end of the day literally get 2 spreadsheets and try and figure out who's got the shares, and then they move them all around, right? It's insane. Yeah. The ASX in Australia just rolled out this blockchain solution. Where did they roll it out? Clearing. The actual providence of a particular stock, I think, is very interesting, and it is broken. And with blockchain, a lot of those issues would be solved, a lot of the inefficiencies, and that to me is where you could keep the existing broking. You know, the stockbrokers, the E-Trades, the Charles Schwabs, the Robin Hoods, all those kind of things, the UBS, all those guys that you can broker with. That's fine. Keep that. You've got the exchange. You know, the New York Stock Exchange is fine. It's exchanging. It's got lots of. It's okay. Where it's broken, where the opportunity exists, in my mind, would be to build a blockchain clearing solution and start to integrate a much better solution for clearing. And I'm not sure which exchange is going to do this first. My contention to you is this. If you go back 50 years, I spoke to this guy about this as well, and look at the NASDAQ. Now, the NASDAQ was actually where all the dog stocks traded, the actual scam penny stocks. That's actually where it used to be.
Exactly. Yep.
They had a vision, and their vision was to create a new tech exchange and a new way of doing things. And they have like very, very advanced technology, but it took them 50 years to do it.
Yeah.
And they got all the Silicon Valley tech stocks. Like Microsoft was a scam company in the past. Just like, this is hard to see today.
Yeah.
But you go back, people will look at Microsoft and go, computers? Are you serious? Yeah. Nah, not computers. That's a scam company. Like, who would want to buy a computer? No way. And you want to buy some software on it? Oh, that sounds like fantasy, right?
Yeah.
That's what it looked like. And so all these tech companies needed somewhere to list, and where did they list? On the NASDAQ, right? And so my contention to you is that there will be an exchange, and there are many exchanges in the US that will go and want to either, back end crypto onto it, or they want to do something innovative that it can't be done right now. They want the white space, and they want to fix clearing, where clearing is a big issue. And that is my contention of where the STO market will start.
Well, it makes perfect sense, Fred, and thank you for sharing that with us. And based on that, let's take another step forward. Is one of my theories, and the way that we've positioned ourselves as a business, and the way that I've looked at the markets and how I've invested, is that I think that the next wave in will be your 45 to 65-year-olds. Now, these are the sorts of people that have watched the .com or participated, or both, right? They watched 96 up, down. They watched 2000, which was the one that captured most of the market, which is like probably our 2000, up, down. Now, whether they did or they didn't participate within that period of time, they were there and they were privy to what went on. Now, in 2017, as we saw the market rocket in crypto assets, we saw a lot of young money come in. Okay, a lot of FOMO money come in. Now, these more seasoned, mature investors, and I'm not talking about someone who's just investing in their SMSF in Australia, that's a self-managed super fund, like a 404 or a pension fund in different parts of the world. What they're actually doing is they're actively managing a portfolio of their surplus income, shall we call it. Now, these people, they don't want to buy the top, so they didn't buy in 2017. They don't want to buy the bottom, so they didn't buy at 3,200. They want to buy that bit in the middle for the next run. They want to make sure that the asset class is going to survive. And I see that as being a really positive thing. And I think that's our next wave in. Now, the good news is that they come in with not just $400 or $1,000 or $2,000. They come in with tens of thousands when they do enter, when they have that confidence and that conviction play. And even their dabble money is much, much larger. Now, leading from that into what I think is also in line with the same thesis is institutions. Now, I thought that 2019, and I still think this, for this market to really take the steps forward and to achieve the greatness that we all hope it will, both in price and in developments moving forward, it requires derivatives. Now, no fund in their right mind, even if they've got $2 billion, they want to risk 1% of the overall portfolio, they're not going to play the game without derivatives. Derivatives of volume, derivatives of credibility, derivatives that are actually regulated. The CME their most recent figures that I saw, and not the most recent, but recent figures, had $1.2 billion worth of volume over the period where the market was running really high. And I think that was for the week, which outdid a lot of the crypto exchanges. Now, the very fact that their volumes have increased so significantly in this last little push to the upside, it says a lot, and it opens the door for real institutions to play in this game, because 2018 was a talk of institutions, but it wasn't ready. Market didn't have the products. I'm asking you, during your time in New York, in interviewing, I think it was 32 people. I know how hard that is because I did it the year before. Well done to you. You're still alive. What was the view around what's required for these institutions, and was there a big shift of institutional interest, I suppose, in the space that you were able to get privy to?
I am not as convinced that the institutions aren't in already. I think they've.
Yeah, but I'm talking to bees, Dick. Like they're just putting the little middle finger in. They're not. They're testing the waters. They're not in. Like if biotechnology is a new sector, they're going to go into biotechnology because it's regulated, it's structured, there's good business models. This is still not a model that is worthy of heavily investing in yet.
Well, I guess what I'm trying to submit, I mean, like there. So when I say in, I think they have programs internally that are running that take 2 to 3 years to see the light of day. Whereas, like these startups, like your business, Craig, you can move so quick and you can put something out and get it out and go. These ones, you're going to need at least 50 people to sign off. And it's a crypto.
We're a speedboat, not a cruise ship.
Right. And I think, so my prediction is that's actually all in motion. It's actually happening. And, the back takes so long to get out. That's just because it's a very large corporation and it just takes a lot of time to do. So look at like the funds that are out there and the funds that are taking action. So look at Andreessen Horowitz and the investments they're making. A lot of them are equity plays,
And that's what VC and private equity will do. They don't want your goddamn token. They'll get the token because that's their exit money. Right, and it might be locked up for a year or two if it's a responsibly run project, or set out. You can sell this much at this time, so they can't dump the market. But if I am an investor, if I am somebody who's in that sort of position, I'm after equity. God damn it,
100%. Look at Galaxy, right? They just sold $70 million of Block 1 equity. So that's they must have made an investment before, and someone had to have bought $70 million of equity in Block 1. Right. Yeah. So there's someone out there who's keen as well. You need a two-sided market. Now, if you imagine that deal's happening and that's found liquidity, that's interesting in and of itself, right? I think that a lot of people are taking positions in exchanges. A lot of people are taking positions in banks. A lot of people and exchanges now. And the large high-frequency trading desks are putting even more investment into this infrastructure. My contention to you is that 2019, I'm changing my prediction now to being the year of infrastructure. It's still broking, exchange, and clearing. Binance got hacked the other day. Binance got hacked. Like, it's still, the infrastructure relatively is still quite fragile to some extent. So,
but was Binance actually hacked, or was it a very well orchestrated private details, phishing, stealing of individual clients? Because I'm trying to get to the bottom of that. Like if they had been phishing and doing all the hacking and all that sort of stuff for 6 months, let's say, and they go, okay, we've now got enough wallets, we've now got enough crypto that we can rob. Let's pull the trigger at the opportune time, which tick these 3 boxes, and then we go. Was it Binance? Because it was their hot wallet, right? It was their hot wallet that got done. But and I don't know this, was it through thousands of individual accounts, or was it actually straight into Binance?
I think it was an insider job. I think someone knew the routine, and I think it works something like when they were trying to move to their new form of SegWit addresses and things like that. I think it was an internal cron job that was running, someone reverse engineered a vulnerability in it. They've probably raised it. No one's gone and looked at it, and they've gone and exploited it. Because if you look at the chunks of Bitcoin that comes out, it runs in this pattern. It goes like 250 Bitcoin, and then 0.56 goes back out into the same wallet. So it's kind of like they're washing the SegWit addresses or whatever it may be. There's some exploitation internally. You'd have to be internal to know something like that. That's what, from a technical, like obviously I used to be a coder. It looks to me like a pattern, and that's how I would explain that.
Well, it's probably a good time for me to say the views and expressions by Fred Schebesta are not necessarily held by Trader Cobb or any of the subsidiary companies that Trader Cobb holds and owns. Binance, it ain't me. Look, I've got to ask this question, right? So you were there for the hum, you were there for the buzz. We've talked to institutions, we've talked about the infrastructure, we've talked about this and that. What excited you, and did anything excite you or really make you go, wow, I've got to change my views or catch up?
So a couple of things. I met with Adam Back, and I've never met him before, and he works at Blockstream, and obviously Blockstream, they write a lot of code for Bitcoin. Yeah. They've got a wallet. They're building Liquid, which is like Lightning. It's different, but and I talked to him about some concerns I had with Bitcoin. I don't know how Bitcoin's going to solve this. For example, who is going to pay the miner fees when the block rewards halve? And I think this is where, I don't know if we want to talk about this, but we put out our yearly Hivex report on the state of the cryptocurrency market, and the halvening. I think it's 333 days or 363 days until the next halvening, right? It's under a year now.
Yep.
And there's an important graph, and I'll try and sort of say it as opposed to
talk to it, because our audience is mostly podcast.
It essentially says we're coming up to, I'd say, we're in a zone where people start essentially accumulating Bitcoin for the next halvening.
Yep.
And what is the halvening? It's when Bitcoin rewards halve.
The block reward.
And it's 12.5 Bitcoin per 10 minutes right now. It goes to 6.25. Now, I asked Adam Back, I said, what are we going to do when Bitcoin mining rewards halve? And what happens when it halves again? Will there be enough fees?
Yeah.
And the most interesting thing he said, and this is what, again, so what did I get excited about? And this is specifically what I was, I've obviously been involved with this, and not as long as everyone else, but to some extent, I got to the point where I was like,
"Switched on bloke, mate."
What's that?
You're a switched on bloke.
But I kind of got to a point where I was like, "What is going to happen? No one's ever seen what's going to happen. No one's been through this before. We're literally never seen an experiment like this on Earth ever before." And so I was like, you work at Blockstream. You're very invested into Bitcoin. You
knee deep in it.
And those guys, they influence pressing the button. They have one guy in their team who presses the button to publish the next update in Bitcoin. And they have a contract with him where they can't legally tell him anything to do, but they work for him. It's a weird contract. It's that level, right? So they're pretty invested into what happens with Bitcoin, okay?
Super, super low key.
Yeah, super low key. So I was like, where's this, what's going to happen? And his contention is that he thinks that regardless of anything, regardless of block rewards, there are actors in the market now that are hugely incentivized for Bitcoin to continue in the way that it's currently structured. So what does that mean? It may mean that, for example, these exchanges, which are making huge amounts of money, start mining and start taking these miner fees.
Investing in the infrastructure.
Right. They might go further down. So we're talking about
the
Bitcoin.
Survival of their business depends on it. So it makes perfect sense to hedge their bets, right?
And Binance is making, quite a bit of money. And Huobi and all these exchanges. I think it was in the Bitfinex report. They made $400 million last year in profit.
That's
if they have to run. Quickly. Sorry.
That's why they raised their $1 billion so quickly.
Right, but if they were
allegedly
under threat of the core asset which runs their business, I'm pretty sure they'd start to get involved. And
the beauty of Bitcoin is you can buy into Bitcoin, its infrastructure and its price by just literally, you don't have to go into a deal with somebody. You just have to go on. I mean, the deal you do is the deal for the infrastructure to have the mining and have the mining prices at the lowest possible price they can possibly be. That's the deal. You're not speaking with the CEO of Bitcoin. You just need, it exists. You just got to go and get it. So you can minimize your risk significantly by making sure that the network is sustained. And look, long story short, they could make a loss. Let's look way ahead. They could make a loss on mining, but to keep the network alive, the exchange itself will probably make enough money to override those losses and still make a ginormous profit. Yeah, I get that.
And so to me, I was like, these guys are thinking about it. I'd never met anyone who could answer that. I was talking to a lot of people. They said, "Oh, I'm not sure." Yeah. But that idea, right? That's the kind of thing. What I've noticed is that I had a lot more access to people who were the OGs, people solving the real fundamental issues of cryptocurrency. And I think it's a fascinating interview in and of itself. But that particular thing I thought was absolutely that. Yeah. The thing I'm excited about, I'm re-excited, if to put it most bluntly, is that I'm actually re-bullish on crypto. I lost, I genuinely thought, at one point we were I couldn't see the way out. I couldn't see.
I think I was with you when there were certain things that you were saying that I was like, where's this guy now? Where's Fred gone? You know what I mean? Like there was definitely a tonality and a language that was questioning. And I never did because I can't really. I'm so deep in this space now that I just need to remain, you build a business by believing in what you're doing and believing in the result that you're going to get. Now, you're going to go through all sorts of ups and downs to get there, but the people that do really well, the ones that just truly believe. Now, that doesn't mean you're going to have success, but it means that you've got the chance of actually doing that. And what you've just said about the halvening and not just the halvening, but the way that these big corporations with very deep pockets can actually help to sustain themselves. It makes perfect sense, and it adds an additional element of security somewhat and risk mitigation to anybody else who's coming into the space. So thank you for sharing that. So before we go any further, I don't want to spend the whole time talking about consensus that we very well could do. And we're going to try and have you on the show more frequently, Fred. I want to go into Hivex now. I want to speak to you about your OTC operation, which is what, year old, 18 months old, something like that? How old is Hivex now?
Yeah, about 18 months.
Okay. So for the listener, for the viewer that is out there right now, Hivex is an OTC desk, deals in 50,000 and above. Is that correct? You want to tell us a little bit more about Hivex and what the objective is, where you're going to be in 5 years, and what the plan is, and how you can actually help people?
Yeah, we make markets for, a lot of different coins. Buy or sell, we don't mind. We make up markets for whatever currency you want to trade in, US dollars, Australian dollars, Singapore.
Okay, so you can have an international clientele?
Yeah, we do. And I think that's because we've sort of built the business on the back of Finder.
Yes.
And the way we help people is, we can get you in or out of a position with a few messages through WhatsApp. No matter where you are in the world, no matter what time it is, we'll make you a price, we'll settle. And you've got the backing of Finder behind us to make it happen. And I just wanted to bring some trust to the market, because this brokerage space, I feel it was a little bit on the sketchy side, to be honest.
It's hard to find a good operator, that's for sure.
Yeah, and we just wanted to bring governance, very high compliance. You do KYC, you do AML. We're pretty aggressive on that, and I'm a very compliant guy, because we have to be. We find us 250 people. It's we have a lot of licenses, lawyers, and I understand how that works. And so I just didn't know where to trade and who to trust. And I just thought, hey, why don't we, we're not necessarily, I guess we're not an exchange, so we can't deal in, we don't have that kind of infrastructure, but we do have access to liquidity partners that most people couldn't sign up an account with. And the reason for that is just, Finder has a large balance sheet, and we have an existing customer base, and so we can trade with the best partners around the world. So you get ridiculously tight prices with Hivex. Basically, that's what we offer.
Yeah. And that's one of the things I think is, for those of you who are dealing in those sorts of size transactions, you need a partner of trust, but more importantly, it's not just the trust of, I trust you because you're a good human, because good humans make mistakes. Good humans can still go bankrupt. Good humans can run a business into a ground. It doesn't make them a bad human. It just means that they haven't got the backing. Now, one of the biggest things I think that Hivex has is exactly what you've said. You've built an international masterpiece in Finder. It is a very large technology company, very, very large. So anybody who's sort of sitting on the fence going, well, who am I going to use for OTC? You really should consider who's backing them, what their balance sheets look like. And if shit did hit the fan, who is going to be the one that's not just going to go, sorry, all accounts are locked, we're done. And who is going to be the one that can go, right, well, we've got some pretty deep pockets, and for the sake of doing the right thing, because not just because your heart's in it, because legislative-wise, regulation-wise, you are permitted to do so. It's very difficult. If you wanted to shut down Hivex, you've got to shut down Finder. And I think that is one of the biggest links to trust, whether somebody likes Fred Schebesta or his team or not. It's the behemoth that sits behind it that allows the liquidity to be what you've got based on prior execution of several different of other businesses, but also just your balance sheet. And I think that's when we look at trust in crypto, and especially on the OTC level, trust it's got to be one of the highest things you look for.
Yeah.
Don't just look for trust as in good people. Look for the backing. Who's actually backing it? Who's got the regulation? Who's got the bank balance? And who's going to make sure that if things do go pear-shaped, if a black swan event does happen, and it will, it always does, you have to prepare for these things, that you're in the best pond with the biggest fish, effectively. So with Hivex now, I mean, and I've been to your operation. It's you are growing quite quickly. What can you tell us about what Hivex has been doing in the last 2 months? Because it's a really good indication, I believe, as to the market that I was talking to before about, i.e. whether it be our institutional or whether it be the higher net worth investors and family offices. Are you seeing your volumes increase? And if it is increasing, is it from the same parties or new parties?
I can't talk specifically about what our clients.
Of course not. Any
specific clients. We hold the discretion to be our number. Again, probably the second thing.
Tell us what you can, Fred, to stay out of court.
So, but what we do see in the market right now is, and what we saw is when with our client base, when the market went down, there were some specific parties that just started buying. Mm. And every step down, they just kept on buying. They've seen this before. They've seen markets and how they operate before. And we were there going we were like, we don't mind either buy or sell. Like, it's not
providing a service.
Yeah, we're not predictors of the price. We don't know, but we will get you in and out as fast as you need, and with whatever size, with a couple of messages, and so I found that interesting to some extent. I also found interesting the changing nature of what they want.
Oh,
so
okay.
we saw a lot of people moving into stable coins, as an example.
Yes, okay.
We saw a lot of people moving into, and I found that interesting for this reason, because when they wanted to get back in the market, we didn't have to wait for a bank transfer.
Bang. Yep.
Instantly went back in.
So they were willing to take away, sit in a stable coin, but not bank out, not cash out. They were waiting, as opposed to, I'm done with this. They were sitting there going, just get us back into this, because we're going to come back. It's just a matter of when.
Exactly right. And so you're talking about the institutions, and we deal with a lot of funds and high net worth and those kind of things. And these guys, self-managed super funds to some extent, but these guys and girls, they're already committed. They're already in. Yeah. They were just sitting out and waiting to come back in again. They're there. They're actually there.
Yeah.
there is that much tether printed for one reason, because there's a lot of tether. You know, and so my submission of what I you know, if there's an inference from that might be interesting, is that the reason why I think we saw such fast moves up again is that people are already ready to go again. This halvening that's coming up and this excitement that's building, and you can feel it. It's sort of, you felt this, like last time, remember in consensus, the prices were going down. Like it was scary.
Yeah, it was getting smashed.
It was wild.
Yeah.
This time there was that light of excitement again. There were people who, you know, not as many people I'd say that were as exuberant, but you could feel like the FOMO starting again. You could feel the exuberance beginning again, and the confidence that it's going to go again because it survived.
That's the biggest thing, surviving.
Yeah, exactly right. The harsher it was, and the more that it survived, the harder it becomes to break. And I think that's what people are starting to come around to, going now, oh, actually it didn't break. Well, I'm in. And I think that's what's happened.
Yep. I couldn't agree more. Now, based again, coming back to Hivex and what you've got, I'm sitting here literally right now looking at the Hivex cryptocurrency landscape report and statistics for 2019. Now, this is a very comprehensive write-up of various different things that anyone who's involved in this market wants to know about. Now, I've got to be honest, you sent this through and I've just started reading through it. And for me, I wasn't even aware that this bloody well existed, Fred. So what I need you to do right now for me is just talk to a little bit of the information you collate, the data that you grab, how it can be useful. And then please tell us all where we can get a hold of this, because I want this in my inbox every goddamn week if I can get it.
Yeah, so we looked at the state of the market. So, you know, 2017, we looked at the ICO market. So there were 875 ICOs in 2017. There were 1,257 ICOs in 2018. You know, we remember that. But you look, you know, what's interesting is that look at the amount of money that was raised. The average raise of an ICO went down, which is interesting. You know, and I think that's that trend, right? Smaller amounts of money raised for more discrete and specific projects, I think is a good thing. Now, and this is really interesting. I met Justin Sun when I was there, you know, of Tron.
Yep.
And everyone criticizes Justin Sun, and I understand. Like, you can understand everyone has an easy way, but if you get actually to the core of the guy, he's a crypto genius because of his marketing.
Yeah. Oh, absolutely.
Right? His marketing is insane. It's insane. Whether you like him or not, I'm going to put that to the side, and it's not for me to judge. I just look at some of the attributes of certain people, and I'm absolutely in awe of his marketing. Like he's unbelievable.
Yeah.
But what's interesting is if you think about when you're analyzing a team now and looking at the ICO space, my contention would be I would assess how good is the leader at marketing. Because my contention to you today and now is that cryptocurrency coins,
as a token holder, it needs to be a big part of their plan.
Right.
If you want to exit,
look at Bitcoin even, right? You've got an army of Bitcoin maximalists that go around. XRP, it's like Ripple doesn't have to do anything now. You've got the XRP army that goes around.
They're nuts.
So those, but my contention is, and I'll submit this, is that if you were to now judge a new coin or a new token, I think there's a new dimension which people can look at and say, how good is their marketing? How good are they going to be at marketing? And my corollary to that is look at the like regardless of Tron and Justin Sun and all those things, put it to the side, just look at BitTorrent as a token.
Yeah.
It has performed and it's continuing to perform, which is very interesting because I think it's got a good use case, but again, extremely well marketed, extremely understandable use case. And I actually think it's quite brilliant in and of itself, right? So there's, you know, and you look at another one, right? So Binance coin, $30 now. I remember back then when we were in consensus, what was like $2, $50, $4? It was wild. It was getting like absolutely murdered in terms of price. But look at that. Look at Binance and their marketing.
That's brilliant.
Cryptocurrencies, to me, are driven primarily today, a lot by speculation,
Mm-hmm.
but also a lot, therefore, in their marketing and their PR.
But why would that ever be something that would be unfamiliar to anybody out there? Because what business is not run by that? Like, if you've got good marketing and good PR, you've got something to work with. If you can get the eyeballs and your messaging is correct, you've got a successful business. Now, it's not easy to do that. It might seem easy, but the problem is with businesses, you've got to test and measure. Just because you've got a great idea and you think it'll work doesn't mean that it actually will. Now, I agree with you. The marketing side of things, and we're looking at having other people at the moment working on some fundamental courses, because I'm not going to write a fundamental course. That ain't my gig, right? I'm a trader. That's what I do. I'm not going to work my way into markets that I don't have any expertise in. We are looking to try and bring something to market. And a lot of it's around that marketing. It's around the network that they've already got. And it really is about what can they do from their current group that allows them to get that traction. Now, I'm going to jump back to Hivex now, because I'm cognizant of the fact that the listeners have a certain amount of time, and yourself and me, Fred, have a certain amount of time. This report that I'm speaking to right now, can you please tell us where we can find it?
Yeah, so you just jump onto hivex.com on the homepage, scroll down. It's free. It's you don't have to be you don't have to trade with us. You don't have to be one of our clients.
It's freely available.
Freely available. Current. It's crypto. If you scroll down, it says "See the Hivex Cryptocurrency Landscape Report 2019." Click on that, and you can read it. It's our second report. There is a link there as well to the 2018 report. We bring this out, and the changes are very interesting. You'll see some of the price movements in Bitcoin right now. That's what I'd have a look at. Have a look at the fundamentals of where that's going, and then what we obviously try and do with that is, we're going to keep updating this and keep bringing it out. But yeah, I guess we're trying to do some more research right now.
Well, it's been an absolute pleasure, mate. And if anybody does want to go to Hivex, wherever you may be in the world, what's the process? It's just about KYC and AML so that you're ready. You don't necessarily need to be ready to buy or sell right now, but get your KYC done, get your AML done. Tell the guys there that Trader Cobb sent you, and they'll tell you that you're a good bloke or a good woman.
We'll especially take care of you.
There you go. Well, you'll be taken care of if you come and you say that you're from my mouth hole. But it's pretty simple, right? Like the whole thing is that people go, "Oh, I'm not going to do it until I'm ready." Don't wait until you're ready. If you've ever got the desire to buy $50,000 or sell $50,000 more, or on anything, get your KYC, get your AML done, and know that it's ready. Because everybody who's traded or invested in crypto assets to this point in time knows that today you might be up 400%. Tomorrow, it might only be up 50. You've got to be ready. So get your AML, get your KYC done. And the website is www.hivex, that is HIVEE. That's 2 E's. Egg or elephant or exuberant.com. Hivex.com. The man behind it is Fred Schebesta. It's backed by Finder.com, a massive tech company. Don't forget the trust. Don't forget the back pocket, and make sure that you trade well. Fred, it's been a pleasure having you on the show, mate. I'll look forward to having you on again, and I'm no doubt going to be in your offices and doing an interview with you sometime in the future.
Would love to have you here, Craig.
Excellent. Ladies and gentlemen, enjoy your day. Speak to you all again soon. Bye for now. This show is proudly brought to you by TraderCobb.com. If you want to get bi-weekly video newsletters on the markets that are not shown anywhere else, just subscribe underneath this video on the homepage. If you'd like to get some access to the free webinars to work out exactly what these trading strategies are about, pretty simple. Just go to free webinars. And if you've got friends or family and you'd like to learn more about blockchain and what the opportunity is, well, I've got a full 40-minute course there for you under free courses. Please share this link around and get involved.